What is going on, everyone? It is Kenneth Beard here, and today I'm going to be doing an overall market breakdown. I'm going to be explaining my thoughts on the overall market, on its direction, news events this week, and basically everything that I've seen going down in the overall market this week. So let's get right into it. First thing that I want to really break down is just the economic data. I'm not really familiar, or I'm not a really expert on what all the economic indicators mean, but I just want to talk about, some, and just basically go over the economic events that have taken place this week. Just because, believe it or not, they do have a factor on, you know, the market and its direction. So, with the consumer price index going up by 2%, core CPI dropping by 1%, obviously this kind of means that the market is seeing a tad bit of inflation to the upside. That's what I believe it means. I know that there is a bit of inflation going on in the overall market, especially, and it's predicted to happen. And we're going to get into that a little bit later, but initial jobless claims, regular state program. You can see the jobless claims are starting to rise back up. So people are starting to file for this, file for not being employed, basically. So that could have a harsh decree on the overall market. Boston Fed, a lot of people just speaking, I'm not even going to say all these names, but, Friday we had retail sales ex autos, producer price index, Empire State Index, industrial production, capacity utilization, consumer sentiment index, business inventories. We can all see these numbers here. Oops. Wait, what happened? Okay. You can all see these numbers here. All of these numbers looking like they're about dropping here. Besides the producer price index, that's going up by 2%. So you can see all of these. So yeah, that was about all of the economic data that we have for this week. So now let me break down. I have notes. I'm sorry, just breaking down. Let me look at these real quick. So obviously, other than all that economic data, the big news and the big mover is really, what Joe Biden has done here, and with, I believe he is having an aid bill with a 1.9 trillion, $2 trillion stimulus proposal, and a lot of, investors are kind of being weary about this. And so you can kind of see, the effect it was having on the overall market here. And so I'm going to just read this a little bit. This is from Yahoo Finance. And, they said stocks dipped as traders consider details of President-elect Joe Biden's newly unveiled stimulus proposal and weigh the likelihood of the package getting quickly advanced through Congress. COVID-19 concerns also flared anew as stay-in-place restrictions tighten across parts of Europe. So parts of Europe are being restricted, and new data show U.S. retail sales unexpectedly fell for a third straight month in December. So you could just see that the economy is kind of going back into a nutshell a little bit. It's what they're trying to explain there, and then you got Joe Biden coming out with this $1.9 trillion aid bill, which is really going to boost up, inflation, which a lot of people are kind of speculating here. And people are thinking that, okay, I believe I saw something saying that he's trying to, here it goes, which has been excluded from Congress. It also seeks to raise the minimum wage to $15 per hour and provide additional funds to schools and ramp up COVID-19 testing and vaccination. So he's just looking to pump up America on steroids. That's what it's kind of looking like, which has its negative side effects. What a McDonald's owner wants to start paying their employees $15 a share. Now, I'm not biased in any sort of way. I just know the outcome that it's going to bring. So, saying that, I'm not a financial advisor in any sort of way possible. Please don't listen to me if you're financial advice. If you listen to me, you will lose money. But I'm not a financial advisor in any way. But you can obviously see the effect investors. You can see what they think about this already. And so we put in a nice top here. This is the SPX. This is what I trade my spreads on, what I trade my options on. I look at SPX. So I'm gonna go off the SPX today. But we were in a pretty good uptrend here on the daily chart. As you can see, we're in a pretty good uptrend here. And today we're looking like, well, not today, but the last couple of days, we put in up a top at 38.26, 69. We put up a top up here. And ever since then, we've kind of just been rolling over. So looks like today we, put it in a long wick. So we may find some support. We may continue to consolidate sideways. Um, that may happen. But we were looking nice going into the end of the year. We had that big drawdown here, which was, that institutional selling, liquidation of portfolios. Then we continue to go higher. And right now we're kind of went to a top. And so, rolling over, dumping, as obviously all of this is taking place. A lot of mixed emotions, a lot of mixed fears going into 2021. There isn't really any certainty. I feel like Joe Biden is trying to make certainty in the markets, in the economy, but really isn't really any certainty, which is why we're kind of stalled out here at the top of this market and seeing a little bit of a drag down here. Let's go over the VIX. Let's break that down. Our volatility here has been not too bad. Obviously, I have some levels on volatility showing me where I think the most important levels here are using these fib levels. And here I got this 78.6 fib level, which is kind of this top here. We get above there. Obviously, we're seeing new highs going into a very critical area of volatility. Today, recently we just been kind of sitting here at this below this 20, this 27 to about 20-ish range. We've been sitting here, from this low up to, about, coming up around this high. Is kind of, the range we've been in right now. We're kind of sitting right here at this 26 area, which isn't too bad for volatility. Not anything extreme whatsoever, but we did see a little bit of a spike on Friday. The rest of the week, we just kind of been going sideways. Did see a spike on which day was this? The 4th, I believe. I think that was the day that we seen market liquidation. But other than that, other than big hedge funds, big institutions, taking out their capital, their cash, liquidating their portfolios. That's may have been what we saw in that nice spike we got here in the overall market and volatility. Right now, volatility is not too crazy. Did see a spike, but not too crazy. Still sitting under, this critical. We get above 28 in volatility. Let's say, next week we continue to get above 28 on volatility. Then I think there's something to be cautious about. I think that, we're going back into a danger zone, a very fearful zone in volatility. But as of right now, as long as volatility stays below 28, I'm fine. I think that the market's just going to stay in a consolidation kind of mixed period. Volatility is going up a little bit. So we've been staying to the high side. So volatility's been staying towards the high side, not really staying, but we see that quite often. So it's nothing to be extremely weary about. It does that when volatility goes up, it comes down. So this, as long as volatility, like I said, stays for me, not for anybody else, because like I said, I'm not a financial advisor. Type of way, don't listen to anything I say. This is what I say. You will be bound to lose money. But for me, staying under 28 on volatility, that is a very relaxed place for volatility to be at, the VIX to be at. It gets above that, then, like I said, I will start to become very weary on the overall market and its direction. We are having a pretty weird day right now. We are having, a pretty um, dragging day in the market. Markets are selling off. But what else did I want to go over? Oh yeah. I wanted to go over, just some sector rotation. I was looking at sector rotation. I was seeing utilities was leading in sector rotation and market performance, which was quite interesting to me. I didn't understand why. So let's just keep that in mind. We can see, I like to check sector rotations just to see, where the money is being rotated into. Energy is being sucked away from, they're sucking the energy out of energy. Energy being down -4%, being, I think, down the lowest in the sectors. So just keeping that out in mind, utilities is being where the most of the money is being rotated into. Maybe that is for, because they need manufacturing of utilities in some sort of way. I'm not expert in that. I didn't really do too much research in that, but that is where what's leading right now in our utility sector. Yes, in our sectors. Next thing I want to talk about is a couple of stocks that I was watching. First stock I want to talk about is this Lemonade here. This is actually a play that I captured. I was watching Lemonade. I saw on a screener, I believe, that Lemonade was very overbought. I saw that Lemonade had skyrocketed, and usually when something like that, I saw like 3 big, huge green candles. Then I seen a nice topping candle here. I was like, oh yeah, Lemonade's gonna roll over anytime soon now. Did a couple call credit spreads up above and made about 50 to 60% a day. So yeah, that was a good play here. I called out on Lemonade. Their next stock right now that I was kind of paying attention to was Moderna. Moderna was having very poor performance, but seemed to have a nice area of demand down here where we got stuffed. And now we've just been having this V-shaped recovery. Who knows how long it's going to last? This is the 1, 2, 3, 4, 5th day of consecutive green that we've seen. Usually when we see that, you want to be weary of just hopping in here and just getting in for a long position, because pretty soon you're going to see a correction. Yeah, this may be a start of an uptrend, but you want to see a pullback before this uptrend starts to, before you start to allocate any money into. For me, like I said, I'm not financial advisor, so wait, don't listen to me. If you listen to me, you will be bound to lose money. But like I said, Moderna is on the way up. Pfizer vaccine, Moderna vaccines, having some pretty good news behind them. Pfizer, on the other hand, I was watching that. Pfizer was, let's look up Pfizer. I believe I have that on my list. Pfizer was looking pretty weak right now, but Pfizer does have a pretty nice level of support down here. Nice level of supply that's been bouncing off of lately. So Pfizer could see a nice reversal as these vaccines are starting to get distributed. I know a couple people personally that are going out to get these vaccines. So I could see some pretty good, I could see a good future for these vaccine companies as they were being kind of, destroyed. They're having very poor performance, but right now, obviously you see it's just on a slight uptrend. Moderna is still going up. These vaccine stocks don't really take consideration of what the market's doing at all. Moderna is still going up, although the market's dropping drastically right now. So it kind of lets you know that Moderna is kind of doing its own thing. We start to see more positive news on these vaccines. I believe Moderna has more potential to the upside. I think it has good intrinsic value to the upside. And I'm looking at volume right now. Volume's not too high. It's kind of just on the low side. So you want to keep that in mind. As Moderna's starting to uptrend, volume's not too crazy. So it's certainly not anything institutional. So that's kind of what I'm waiting for. I'm looking for some volume to hop in this Moderna to really give me some confidence that this thing is going to have a V-shaped recovery, which is already kind of confirmed we had, pull back in the breakout. But, I kind of am taking a conservative approach with these vaccine companies. But obviously, if you're a believer in these vaccines, go ahead. All means do your own research, because I am not a financial advisor for the third time. I'm going to say this again: do not listen to me in sort of type of way. You will lose money if you listen to any of my advice, and I'm not a financial advisor. I'm not licensed in any sort of way. So that is going to be the wrap up with this video. I hope you guys enjoyed it. If you did, leave a like, comment, subscribe. Um, like I said, I'm not really 100% with those economic data and those economic, reports and stuff like that. You can look those up if you want to. I only look at a couple of them, like jobless claims reports, retail sales, things of that nature. Those that really give the market a nice impact. I also watch speeches as well. The speeches really do have impacts on the overall market. If you really want to know what those big people, meaningful people in economy have to say about the market, you want to listen to those people as well. They have some good insight, and usually the market reacts to what they say. So I'm gonna leave you guys with this one, and you make smart investments. Y'all have a good one.